Economists have sought to reiterate that the Reserve Bank's hawkish stance is warranted when it comes to monetary policy, given the ongoing global economic risks. This is in reaction to the latest interest rate decision by the Reserve Bank's Monetary Policy Committee to again hold on hiking the repo rate, which remains at 8.25%. Economist Tertia Jacobs says the slight uptick in consumer price inflation at 4.8% is telling of the current environment.
I thought there would perhaps be acknowledgement of inflation that is moderated. But the governor stressed that there's serious upside risks to in cards. In the beginning of the year, one of the risks to inflation or to the disinflation process was the potential increase in energy prices, especially the oil price. And that is now materialized. So although, it's very unlikely that we will go back to inflation, above 6%, it does arrest this return of inflation to 4.5%. And we do see inflation then re-accelerating to about 5.4, 5.5% on the back of the increase in the fuel and the diesel prices.
Analysts agree that the high interest rate environment will remain for a little longer. Foord Asset Management's Linda Eedes speaks to us now. Good morning, Linda. First, what has been your reaction to the second consecutive pause in the interest rate hiking cycle?
Good morning, Tumisang, and thanks for having me on the show. Well, we believe it was the right decision. Quite surprising was that two committee members actually voted for an increase in interest rates. So two members actually voted for interest rates to be increased by 0.25%. Of course, three members voted to keep rates on hold. And I think that's the right decision given the upside risks to inflation, but managing that tricky balance of making sure that increasing interest rates don't tip our economy into recession.
Widely welcomed, another hold, but at the same time, as you indicate that two of the MPC members would have opted and voted for maybe a 0.25 basis point increase. Would they have been warranted, especially because the analysis that's come out is that the interest rate hiking cycle is not over just yet?
Well, to me, I think one thing that the Reserve Bank is watching very closely is not only the inflation numbers that are coming out, and those are drifting closer towards that midpoint range, that 4.5% range between 3 and 6%. What they're looking at as well are inflation expectations. Now, recently, the Bureau of Economic Research brought out the average inflation expectations, and those for this year are over 6%. For next year, they're close to 6%. Now, of course, if everyone is expecting inflation to be higher, then that starts to become a self-fulfilling prophecy, and it starts to actually factor its way into core inflation over time because decisions that are made, increases that are given, sort of center around those expectations. So the governor did make the point that they are looking quite closely at inflation expectations as well as current inflation, and they really would like to see those expectations as well as current numbers stay roughly within that midpoint of the 3% to 6% range.
Having said that, what's the near-term outlook, as we did hear from the Reserve Bank governor yesterday that another hike is likely still on the cards, and the same applies for the likes of the U.S.?
Yes, well, that's what they mean by a hawkish pause. Of course, hawk, as the name suggests, or about the bird, suggests that they're going to remain vigilant and ready to act. So they are absolutely ready to hike rates further if they see that inflation isn't trending back to where they'd like it to see. And we must remember that their primary objective as a central bank is to maintain price stability, which is really just a complicated way of saying keeping inflation in check. If inflation is allowed to run away for whatever reason, whether they're external reasons or internal reasons, that becomes very difficult to create economic stability. And without economic stability, it's very difficult to get economic growth.
And economic growth is a point that was raised in the outcomes of the Monetary Policy Committee having met this week. What is the outlook for South Africa? We've seen economic growth really at a steady pace that is not encouraging, and therefore it translates into how the economy has been unable to accelerate the creation of jobs in this country.
Well, looking at the glass half full, the question was raised in the Q&A session as to whether they are concerned that, these very high interest rates are going to actually cause the economy to go into recession. The answer to that was no. The economy is quite miraculously, I think, given all the headwinds that we have actually faced, is actually still growing and is expected to grow, albeit very, very slowly and not at the pace that we require for increased employment and, sort of for an upliftment of people across the board and companies across the board in South Africa. But it is actually growing very slowly. So I think what was very interesting was that the governor did make the point that economic growth is also dependent on fiscal restraint. Now, what does that mean? That means that he was referring to how government manages its finances, and it needs to manage its finances in a responsible and sustainable manner. And so I think there was a little bit of a passing of the ball to the National Treasury. Of course, we're going to see the medium-term budget policy statement coming out on the 1st of November, and those decisions that are to be made with regards to where the government spends, sort of bringing in spending where there have been issues in the past, being very careful about continuing to spend in those areas of the economy that are going to fix some of the problems that we face, such as load shedding. There was definitely a little bit of a nod to National Treasury to say, we're doing our bit to actually sort of keep inflation in check. Over to you, and we'll be watching very closely what happens on the 1st of November as a result.
Indeed, we will, and it's quite bold of the Reserve Bank to raise this particular matter. I'm interested in finding out the expectation from National Treasury when that medium-term budget policy statement is delivered on the 1st of November, their stance on monetary policy, because we know on the political side of the coin and argument is that the Reserve Bank should at least be trying to give some sort of relief to consumers who are cash-strapped.
Well, I think they are making some tough decisions. And again, I think they're sort of calling on National Treasury to do the same. It's not easy to keep interest rates at high levels. It's not easy to actually hike them even further, given that the pressures that the economy already faces. But as I mentioned earlier, the central bank's primary function, over and above everything else, is to make sure that inflation doesn't run away. Because if inflation does get out of control, then that means further rate increases down the line. So unfortunately, it may be necessary just to take a little bit of pain in the short term. It's a very blunt tool, interest rates. But having said that, inflation is trending in the right direction. A few risks which we need to kind of keep an eye on, but for the most part, the Reserve Bank has done a pretty good job of managing that inflation curve.
Lastly, Linda, there's talk of maybe an interest rate cut, but that is likely to take place in around 2024, especially not in the beginning stages, though, of that new year. Your expectations in that regard?
Well, we will be watching. In fact, the 1st of November is going to be a very interesting date because it's also the next date that the U.S. Federal Reserve, or the U.S. central bank, announces their next rate decision. And we tend to, at this point in the cycle, move very much in lockstep with the U.S. Fed. Of course, the U.S. Fed also announced a hawkish pause this week. So it's very difficult for the South African Reserve Bank to cut rates ahead of the U.S. And the reason for that is that we tend to offer investors and lenders to our South African government a higher interest rate to actually incentivize them to take on a little bit of extra risk, lending or investing in a country that is actually more risky than the United States, being, of course, the economic powerhouse of the world and having the global reserve currency as well. Now, that difference between our interest rates, which are, of course, higher, then compared to the U.S. interest rates, has actually narrowed. So that actually means that we are not offering as much of an extra yield as we have in the past to entice investors to take on a little bit more risk and lend to us, or in fact invest in our economy. So we would be very, very hard pressed to actually start cutting rates before the US does the same. So we'll be watching what the US Federal Reserve does, and of course the rate decision from the Monetary Policy Committee happens later on in November. So that'll be absolutely key as to when the Reserve Bank has a little bit more scope to actually cut rates at some point down the line.
Thank you so much for your insights. Linda Eedes is of Foord Asset Management. They're adding her reaction as we continue to get the latest in terms of analyst views with regards to the interest rate pause, the interest rate hiking cycle being held there by the Reserve Bank for the second consecutive time.